Hello, everybody. Good morning. Welcome to the Morning Vol Report. It's Ian Giovinazzi, Chief Operating Officer of OptionPit.com. Welcoming you to SED. Let's see. Our Professional Traders Summit is happening. We also should have our Condor Intensive classes coming up next May 6th, next Saturday at 9:30. Understand how these things work, how you can make money from them, all that kind of good stuff. It's a 3-hour class, the break in between. Mark and I each take half. Also, anybody that's an option pick client, you can hang out with Mark and I. We have a lot of speakers on looking for trades. That's happening June 28th through the 30th. Let's go to what's going on today. And I, of course, am not logged in, but I will be. I don't know what happened to this. Oh my gosh. All right, we'll start with VIX. All right, what we have is what? We had massive sell-off in volatility yesterday. We had a pretty good rally. We have more rally today. I think led by Cat and McDonald's. Kind of bellwether stocks doing okay. So the Dow is up 1%, probably mostly on these two. And we have not even had the big technology, the big tech earnings come out yet. I believe we got Amazon, Microsoft, a bunch of them coming out this week. So it just, like, all I'm going to say is we got past this French election thing clearly with VIX below 11. I know it's hard to believe, but you could see lower vol. We could. Earnings are going to come out if they're good. So far, the market has liked them. It's very easy to rally. So with VIX this low, I think probably one of the better trades is you buy SPY calls. That's something we looked at in our chat room last week. Buy SPY, buy VIX. VIX calls are so cheap. I think you just buy each and let them run in through the earnings cycle. We'll look at that as a trade today in our chat room. Also other trades. It feels like we'll still see a little weakness in gold, a little weakness in treasuries. All this can be hedged by midterm VIX. XOK time spreads. We looked at QQQ time spreads. All that stuff is kind of building up. So I think they price really well. Also, because you do have those elections coming out, the time spreads look okay where you could sell. This May 5 is the stuff that's expiring right before whatever the second round of French elections. We'll probably get a little bit of a vol jump before that. But remember, you never know. So that's not a bad idea to sell that strike, although it has gotten compressed hugely. But it feels like it's just a cheap way to ride things out. And we had a strategy letter trade like that for yesterday. Also, the next thing you want to look at is potential for the vol products. As low as they are, they probably could go lower. We're starting to see, I think VXX is at an all-time low today. I think UVXY is at an all-time low today. After being quite elevated. So now what you're looking for is just that kind of steady decay. With a VIX at a 10.5, May has a ton of room to travel here. So yesterday I thought, well, there wasn't a whole lot of premium in that future, and now, with VIX at 10.5, there certainly is. With June at 13, that's probably a little cheap relative to where VIX is here. So as funny as it sounds, the vol futures are actually looking for lower volatility, if you can believe it. They're at a premium, but they should be much more. October future below 18, way below 16 now. I remember last year, in years previous, just looking at that SEP-OX cycle where they were trading in the 19-20 range, and now they're in the 15s. For whatever reason, the market is massively repricing volatility lower. The risk of the euro breakup is now, at least they're pricing it like nil, like it has no shot at all to happen. Very strange. That's a big change from at least, 2011. We've always had these euro shocks, and we've had an elevated term structure because of it. So how low those back months can go and how flat the curve can get, I honestly don't know. Because VIX is still a relatively new product. What is it, around 10 years old? We have had most of the life of VIX currently has been under really higher vol. From 2008, we've dripped down. We had a bunch of spikes. So, it is possible, and I would just say be careful. As messing around with the farther term, I don't really know how low those can go, how much they can compress those spreads. There's a theoretical price as time goes on how low they can go, but they're still futures. If somebody wants to sell them to generate yield, they can. So that's something that we'll keep an eye on. But with VIX in the 10 handle, there's plenty of room for the vol futures to go down. And that's the bottom line there. So drops now in VIX will, when we just had this was a discussion yesterday, drops in VIX now will hurt the vol futures more because they'll have farther to decay. Okay, and that's very important. Okay? And with that, that's our vol report for today. Look for classes. If you have any questions, you send me a note at andrew@optionpit.com. And I will talk to many of you later. Bye-bye.